Welcome to Drill Down Insider, where we drill down on the business stories behind the right companies at the right place at the right time. Or welcome to Drill Down Insider. I'm Cory Johnson. We're drilling down into the people and businesses behind powering technology-driven change. Joining us right now, Elastic CEO Ash Kulkarni. His company, Elastic, search and analytics engines, powering everything from Netflix recommendations to Goldman Sachs risk analysis, to insurance to automobiles. Really fascinating company, and has quietly been at the cutting edge of machine learning since before I could spell the words AI. Joining us right now, Ash Kulkarni here on the Drill Down Insider. Glad to have you back.
Thanks for having me.
So you guys just reported a really strong quarter, and it's interesting because I don't want to talk about the stock market except to say that it really gets things really wrong sometimes. And last quarter, the stock sold off like crazy after a quarter that wasn't, I didn't think, too bad. Indeed, I think the revenues are up by quite a bit on a year-over-year basis. And yet this quarter, the stock market loved it, and it seems that you're continuing a pace. Talk to me about what has changed in the last 6 months for Elastic.
Yeah, so we, first of all, in Q2, which is the quarter that we just reported, we had a really strong quarter. We grew revenue 18% year over year. Our cloud revenue grew 25% year over year. And our operating margins came in at 18% year over year. So, strong across the board. I think some of the areas that were really most exciting, both for us internally and for investors, were just the ongoing momentum in AI. So our customer commitments around AI continue to build. We now have over 1,550 customers using us on Elastic Cloud for Gen AI use cases. So everything from semantic search to retrieval augmented generation. We had continued momentum in terms of customers making large commitments for generative AI projects. We actually had in this Q2, this past quarter, 3 deals over $1 million, all related to Gen AI. And that momentum has been a big factor for why you see the markets rewarding us in a positive way. And then also at the beginning of the fiscal year, so 6 months ago, we had made some sales changes, some sales segmentation changes, to sort of drive more focus on our enterprise and strategic accounts, our high propensity mid-market accounts. So it was the kind of change that we needed to make sure that as we grow from $1 billion in revenue to $3 and $5 billion in revenue, that we have the right kind of organizational model to drive sales. And we got a couple of things wrong in terms of how we executed on that change. And so at the end of Q1, we had talked about some of that near-term impact. And what I told investors even then was that we expect that impact to only be a near-term impact. And we expect that it's a stumble, not a fall, and that we're going to correct pretty reasonably quickly. And obviously, the street, as you said at the end of Q1, you reacted very negatively. Yeah, but now they've seen that what we said, we actually delivered, and we have the right kind of operational cadence. We have the right execution chops. I think that was very well received.
Let's dig into that a little bit, because I think that it's an interesting business decision that anyone in any kind of business, even outside of technology, faces, which is you've got a very popular product, quite often introduced by the users who go to their company and say, we're going to start using this thing. And you kind of end up inside of a company, maybe even without a sales motion, and then you land and expand. And so one of the things that I look at is your customer count and the growth in that customer count. And what it shows me is, like any good number, it shows you more questions than answers. Because what it says is, what do you want to do? Do you want to expand within the companies? You've already gotten through the hardest thing in the world, which is getting in the door. Do you want to expand there? Or do you want to do the hard thing and go after more doors? And those are completely different sales motions. And I wonder how you try to where are you focused there? I think I know the answer, but I want to know where you're focused there, and I want to know why you've made that choice.
Yeah, so we now have over 20,000 customers. And when we look at that and we look at, the penetration that we have in the enterprise segment, what we see is we still have significant room for expansion within the customer base that we're already present in, right? And so the way I think about it is I'm not interested in just growing customers as a vanity metric. What is more important is to make sure that we are continuing to grow the base, but in a meaningful way, add customers that have high propensity to grow. So in the mid market and above, so enterprise and strategic, I'm less worried about the SMB segment. In the SMB segment, we have a self-service motion. Customers will come to us, and as they come to us, like that's all goodness, we'll continue serving them. But that's not where I want to have the sales teams paying attention, putting their energy. And so what we care about is the customer count that spend over 100,000 with us annually. And every quarter we grow that number in a meaningful way. That's where my real focus is. And that's also why we made some of those sales changes, because like you said, there's tremendous opportunity. We're sitting on a massive TAM, and especially as generative AI becomes more and more mainstream, we see large enterprises adopting it in meaningful ways. The market opportunity to be captured there, Cory, is enormous. So I want our attention to be diverted towards that, and not some long tail total customer count metric that might seem good on paper, but at the end of the day is not helping move your business forward in a material way.
Well, it's easier to have 100 customers at $1 million than 1 million customers at $100.
Exactly.
You went through on your conference call this list that I'm going to read, because when you talk about the leading companies in AI, the list that you went through briefly in your conference call was almost ridiculous. But I'm going to read it really quickly just because you guys are so deeply embedded in what goes on in the world of AI at the highest levels, and you have been since the very start, long before AI was generative. But the list you went through: Alibaba Cloud, Amazon Web Services, Anthropic, Cohere, Confluent, Data Robot, Dataku, Galileo, Google, Hugging Face, Lashuan, Llama Index, Microsoft, Mistral, NVIDIA, OpenAI, Protect AI, Red Hat, Unstructured, and Vectorized. I had to breathe 3 times in that sentence. It's just an incredible list of the greatest companies in AI. And I wonder if you could unpack a little bit what it is that you do that those great companies can't do on their own.
Yeah, so we have the best vector database on the market, and that's what we're extremely proud of. And our vision is very simple. We think that to get AI right, customers are going to need a large language model, and they're going to need choices in large language models, because you will see meaningful differences in terms of price and relevance and accuracy and so on.
You already see it.
You're already seeing it. Like you're seeing like a massive amount of both innovation but also disruption happening there. So we partner with all of those players. The second thing that you're going to see is all the orchestration around the data itself, and that's the reason why we partner with players like Hugging Face and Llama Index and LangChain and so on and so forth. And what we bring to the table is the best damn vector database. Our ability to take in massive amounts of unstructured data, that is going to be the data that is involved in all of these manual processes that companies want to try and automate,
Right.
for search experiences, for agentic experiences and workflows and so on. And we want to be that runtime RAG platform. And so partnering with all of these players gives our customers a well-integrated set of capabilities. So it's not something that they have to stitch together themselves. We work with all of these partners. So what you get out of the box from us and these other players just works, right? And if you can get that kind of an experience to a customer, they get going faster, they are up in production faster. It's good for them, it's good for the ecosystem, it's great for us.
And that should be the promise of AI, even for those orchestrating AI, is it should be simpler to implement. It should be easier to find the solutions that you want.
Exactly. And then, it's oftentimes what I find is companies miss the point that they can't do everything by themselves. It's really important to have an open mindset. It's really important to have the mindset of partnering well, knowing what your sweet spot is, knowing what your core competency is, and then getting together with the rest of the players that provide that rest of the stack, and then taking the hard, the work upfront, doing the hard work upfront to build those product integrations. So in our partnering motion, we always think about things in 3 vectors: build with, market with, and sell with. And I always start with build with. If we can build a great integration with all of these different partners, then the product becomes so compelling together that the market with and sell with just becomes that much easier.
I think that one of the interesting things about your vectorization that's so strong, from what I understand, is that the usage of RAM is so much less that it allows sort of a large language model to spin up and spin up for longer because you have less time having to access RAM, and it's measurably better. Is that right?
Yeah, so the large language models sit next to the vector database, and effectively, the way Cory, I'd encourage you to think about it is the overall cost of the system, right? And these large language model players are trying to bring down the cost of inference, the use of large language models. They're doing a bunch of great work on that end. The other part of the problem ends up being, when you have terabytes and petabytes of data that you want to vectorize and that you want to use in these agentic flows, it is super important to be able to do that in an efficient way. Because
Right.
if you take a search experience and to go from traditional search to more vector search or semantic search, if it costs you like 3, 4, 5x of what it costed you, like you're not going to fund those projects. You're not going to really get behind it. And so what we have done is continually bring down the cost, the memory requirement, the CPU requirement, etc., and the storage requirement in a very meaningful way. And that just means that more projects, more workloads, more use cases are getting funded. And that brings down the overall cost of building the system, and the ROI is that much greater.
Now, it seems to me it would also bring down the number of errors because when you're dealing with RAG or retrieval augmented generation, for those not in the game, we probably already lost those people. But if you're dealing with RAG, you're introducing a greater possibility of error. So a lower use of RAM would lead to more accurate RAG results. Yes.
Yeah, not necessarily. I think those two things are somewhat orthogonal, but the way we do it is without compromising. We're able to bring down the amount of memory required, Cory, without compromising the accuracy. And accuracy is what we've always been the absolute best at, right? So, the reason why Elasticsearch became so popular, in the last decade was because of a few factors. Our scale was unprecedented. We were able to scale incredibly well.
Yeah.
We were able to do that very, very cheaply. So, value for money has always been a big selling point for us. And the third was relevance and accuracy. So when you look at relevance and accuracy, Elasticsearch always provided the best answers. And we've been able to continue that in this new world of AI with this, massive reduction in memory. And when you're doing that, and when you do that well, then the amount of tokens you need to send to the large language model also go down. So the large language model can operate on things in a much more efficient way. Things are cheaper and faster, even from the LLM side. And that's the reason why these hyperscalers and players like OpenAI and others, the integrations are so meaningful, not just to us, but even to them.
It's a fascinating time. I want to make sure we talk a little bit about security, because we haven't talked much about that. But I think that it's not only such a big business for you, it's also such a big opportunity for you guys. And I've been spending some time working on this lately with some other things I've been looking at sort of what's happening in the SOC, or the Securities Operations Centers, and how they're changing what they do. And again, once again, generative AI introduces a possibility to rapidly get to a response to a cyber threat. At the same time, the bad guys are using AI and generative AI to write better hacks. Explain to me what you're doing there and what you're seeing in terms of the trends driving your business.
So first and foremost, you're absolutely right that cybersecurity is going through a revolution of its own, being driven by AI. And the reason for that is very simple, Cory. If you step back and say, historically, what has a SOC struggled most with? It's been a couple of things. One is not having enough visibility into all the data that could and should inform them. And the second is not having enough skills in their own organization to be able to do all the right things that they need to keep themselves secure. And so,
you mean like a certain kind of ransomware attack would show up on their front door and they wouldn't have the tool to defeat it?
No, not necessarily the tool to feed it. They wouldn't have seen exactly when, as an example, that particular piece of malware even got into their systems. Is it lurking in other places? Because a lot of these attacks tend to be low and slow. They come in and then they stay dormant for a long period of time, and then they start to percolate. So by the time you realize that something is wrong, what you don't quickly realize is it's spread across your organization, and trying to play whack-a-mole becomes really a huge issue. So first of all, it's that visibility in data, being able to go back and say, let me look at all of my systems going back a year and a half, going back 2 years. How quickly can I do that? So one is that data visibility problem. And then second, simply cybersecurity skills. I can't tell you, like, this is the number one problem, Cory. Like, the number of customers I speak to who go, we just can't train enough people. We can't, pay them enough to convince them to stick around with us over a period of time. The moment they get trained, they go get a better job for 40, 50% more. And it's just a constant struggle. So this is really where, we are seeing a complete revolution in the SOC space. And what we've always been known for our ability to ingest in, retain, and analyze massive amounts of data over periods of time. But we have been leaning in with AI, because if I can apply AI with things like attack discovery, which automatically goes through all of your alerts, correlates them, connects them to the MITRE matrix and everything that we know about known CVEs and other things, and helps the human analyst quickly figure out what are the actual attacks that are going on. So go from just looking at alerts to actually looking at attacks. And when you're able to do that, now I know which alerts to safely ignore. I know what things to really focus on. And then the system, through the AI, also gives you specific recommendations and says, instead of just following some scripted run books, here's what you need to do in your specific context because of what you're dealing with.
It's adaptive.
That's what you're leaning in. So it's pretty amazing.
Does that mean you're starting to bump up against companies like CrowdStrike and Splunk and Palo Alto Networks, or work with them into their sort of their offering solutions?
So we compete with all of them, but realistically, the player that we see the most, because when you think about the scale in enterprises that we operate at, Splunk's probably well known as the incumbent in most cases,
right?
And we are the ones taking an AI-based approach to completely change the space here. So we see them quite a bit. We see CrowdStrike quite a bit because they are in with endpoint security. More often than not, CrowdStrike is either CrowdStrike or Microsoft is the endpoint security player. And we have connectors and the ability to bring in that data into Elastic, because customers often want to take all their network, their application logs, all of this other security data, and also enrich it with the information that they're getting from the endpoints. And so we've taken the hard work to go and integrate with it. Now, they also compete with us in certain ways on certain products, but it's more of an area where in the security ecosystem, all of us players are really good at competing while at the same time being able to connect to each other's technologies. Without that, it just would not work.
Co-opetition. And it's also interesting to hear it starts to really make sense how the security products that you have blend into the observability products, because it's all one and the same, which is understanding what the heck's going on through the input of massive amounts of information, even though this might be different parts of an IT organization.
And it's the same data, which is the most important thing. And so oftentimes what we end up doing is talking to the customer and helping them understand that they're duplicating their costs by doing the same thing in two different places. Now, the analysis might be different, because in one case you're looking at machine metrics, you're looking at error logs and so on that are related to observability to make sure that the systems stay running at the right kind of levels and so on, performance levels. In the other case, you're looking at indicators of compromise, you're looking at abnormal login patterns, etc. But it's the same data. So oftentimes what we'll go and we'll educate our customers on how to use cross-cluster search, so they can have different teams use the same data without duplicating it in such a way that they are able to have the right kind of provenance and governance over that data. So do it in a secure and privacy-centric way without doubling their costs. And that's a huge value add. So we're seeing huge progress in terms of displacing incumbents. Like one of the data points that I gave on the Q2 earnings call was, we had announced this express migration program to help customers migrate off of incumbent technologies. In return, we give them credits, both for services as well as the subscription, to bridge that double bubble that they encounter when they are making the migration. And with that, we saw 40 deals that we won in the quarter that were deals where the customer actively took advantage of those kinds of capabilities, and in return we get a multi-year commitment from them. So it's a win-win for both us and the customer, and we're seeing a tremendous amount of traction in observability and security for that.
And this again gets to that whole question of, does that help you expand, or again the focus is on land? And it sounds like it's a little bit of both.
Yeah, it's the land motion, especially given that we are in about 55% of the Fortune 500 companies out there. So we still have a lot of ground to cover. I think there's a lot of headroom for us to grow. So land matters, but landing in the places that matter, that's the way I'd frame it. And then expansion is the clear near-term answer. And so the expansion motion is what we're driving hard through our sales organization.
Great stuff. All right, we've been speaking with Elastic CEO Ash Kulkarni about the evolution of AI, enterprise search, security implications for global business. Great conversation. Thank you, Ash, for coming on. We appreciate it.
Thank you very much. Take care.
All right, and coming up next, the Drill Down Bite, the one number about Elastic that tells us a whole lot. Welcome back to the Drill Down Insider. That was a great conversation with Ash Kulkarni. Your Drill Down Bite, the one number that tells you a whole lot, is 13%. The company grew its RPOs, its remaining performance obligations in the most recent quarter, at a 13% clip. So when he talked about building up business, they've built a $1.27, let's even call it $1.3 billion worth of revenues that they've got contracts for, growing at a really strong clip, suggesting that the growth for this company, even as they continue to land and expand, will continue apace. All right, thanks for checking out Drill Down Insider. I'm Cory Johnson. Drill Down Insider is a production of Epistrophe Capital Research.